American markets rose today in anticipation of a week of earnings reports from some major technology companies. My next guest says there are questions about whether 2026 will bring meaningful returns on AI investments. Let's go to Steve Rowles, Senior Portfolio Manager at TriVest Wealth Counsel. Thanks for joining us today.
Hey, great to be here. Thanks so much.
We know investors have a lot of concerns about how many billions of dollars tech companies are investing into this build out. Have some of those concerns lessened? They started sort of late last year.
They haven't yet, but I suspect that they will. What we saw stemming from about September, so we saw some concerns starting with Oracle, and it fed into the rest of the market. Are the AI spending, is it too much? So while we got big earnings this week by Microsoft, Meta, and Apple, I think the key is going to be how much are they spending on CapEx? Not just the earnings, but how much are they spending on CapEx? And that's played into the market. We're seeing that Microsoft is down substantially about over the past 6 months, about 10% actually. So that's not quite the Mag 7 environment that we're used to. So what's the catalyst for that? Well, it's this AI cap spending. Looking at the AI development over the past 2 months, it's really evolved rapidly. And the hyperscalers are keen to invest more to capitalize on that and get that return of investment over the next few years here.
Okay. With earnings coming down this week and later next month, will guidance be more of a watch than usually it is?
Yeah, 100%. I'd agree with that, that it's all about the guidance. Getting back to Microsoft, they expect guidance for Azure to really be about 37% growth. So it's all about the guidance. Meta is another one that is really talking about their guidance as well on their ad revenue, and Apple further with services guidance and whatnot to really high guidance from the last quarter. So we'll have to see if that is maintained. But it's guidance and CapEx are the key themes over the next few weeks here.
Let's talk a little bit about the latest Donald Trump threat of a 100% tariff on Canadian goods. CUSMA, as you know, still up in the air. What are the implications for the market with this threat hanging over it?
I mean, it's been a threat for over a year almost. So it's really, is this a threat or is this a stalemate? And I'm looking at it as a stalemate. The market's really discounted it. I thought the markets would react a little bit today, specifically on the bond market. The international bond market is not making any decisions on the Canadian market yet. It's being deflected as this will happen, this will occur, that by June we'll get a deal, but it's coming. And we haven't got a deal yet. The deal with China was obviously miscommunicated to the Americans. I think Scott Bissett brought that up on the news in the US last week, that Canada will not be a base for cheap Chinese goods to enter the US. I think the parallel would be a market like the Hong Kong was the entry point into the free markets for China back in the old days and back into China in the new days. So that's on the table. So there's a lot going on here that needs to be addressed. And I think that comes down to, can Prime Minister Carney compromise a deal and get a deal done before we have the reviews in June?
Okay, let's get to a few of the stocks you like, and tech is a focus for you. You mentioned Microsoft being off 10%. So are you picking it up now?
Yeah, I think it's a great time to buy. I think I prefer to buy stocks that are that downside protection has already been there. So it's off from its highs from a few months ago because of the AI news. But today, on the good news for Microsoft, they launched their new, it's called the Maya 200 chip. It just announced earlier today that that's going to be their new chip. The comparable would be the Google's TPU chip. So they are in the AI inference space now, and that is a big play. I'm surprised they issued this today and not during the earnings call, but I think it's a move in the right direction. I think Microsoft is flying on all cylinders here, and that, yes, they're spending a lot of money on the AI infrastructure, but they're making a lot of money, and they have $100 billion in cash, and they're deploying that cash, still being conservative with their debt. So I think it's a good time to buy Microsoft right now when it's down.
Okay, let's get to another stock you like, which is Telus. And I'm wondering why you like Telus among the other telecoms.
I like Telus because I like the cash flow and I like the management and I like what they're doing. I like the fact that they're divesting some of their non-core assets to clean up their balance sheet. The stock is, as you can see by the chart, it's just above 19 today. It was at about 17 when I started to implement it into my portfolios. But more importantly, it has a 9% dividend. And the dividend was really the biggest concern a few months ago when the stock started to decline. I think it was a JP Morgan downgrade on the dividend. But looking at the dividend and the growth that was implemented continuously for Telus, well, that's been on pause. And I think that's a prudent move. I think the market's trying to realize that. So if you're getting a 9% dividend with some upside, get it back up to 22. You're looking at close to a 30% move there when a total return. And for a retirement portfolio, I think it's just a top stock for the cash flow, the new balance sheet. So it's a highly recommended stock for retirement portfolios.
Just on the dividend, what they had announced was that they're not going to increase the dividend, but the dividend itself is safe.
Yeah, they still have positive cash flow. And so it was a pause. It wasn't a cut. And I don't see them cutting. I think that they're divesting. That's going to further increase cash flow. I expect that cash flow to increase over 2.5 billion. So it's a good safe dividend.
All right, Steve Rowles, I'm going to leave it there. Thank you very much for joining us. Steve is Senior Portfolio Manager, TriVest Wealth.